Hey, welcome to our weekly segment where we guide you on your journey to financial literacy.
We like to make these videos short and sweet in hopes that you learn a new economic term while keeping you updated on 3 financial events that happened in the past week.
Without further ado, let's get right into it. So a sharp decrease in longer-term bond yields appeared to help push the S&P 500 index to a record high in a week of relatively light summer trading. The decline in yields favored growth stocks by reducing the implied discount on future earnings while weighing on financials by threatening bank lending margins. The technology-heavy Nasdaq Composite Index outperformed and marked its fourth consecutive weekly gain, while the narrowly focused Dow Jones Industrial Average recorded a modest loss. Healthcare stocks led within the S&P 500 were boosted by gains in Biogen. The drug maker's shares rose sharply after the Food and Drug Administration surprised some by granting board authorization to its new Alzheimer's disease treatment, Aduhelm. Interest rates and inflation seem to continue to dominate sentiment. The yield on the benchmark 10-year U.S. Treasury note decreased throughout most of the week, seemingly pushed lower by recent assurances from Federal Reserve policymakers that they would keep monetary policy highly accommodative for some time, and that the recent spike in inflation would prove temporary. On Thursday, yields jumped briefly after the Labor Department reported that core consumer prices had risen 0.7% in May, well above the consensus estimate of 0.4%. The annual headline print reached a 13-year high of 5%, while the one-month trading totaled 0.6%, due in large part to a jump in used car prices. However, longer-term inflation expectations appeared to remain contained. The University of Michigan's survey of consumer sentiment, released Friday, showed that Americans expected prices to rise 4% in the current year, versus the previous month's read of 4.6%. Consumers also grew more confident, with the survey's overall sentiment gauge reversing much of May's decline. Policy developments may have also supported sentiment. On Thursday, a bipartisan group in the Senate reached a deal on an infrastructure plan that would not raise corporate taxes, as the Biden administration had proposed. The plan would also include USD 762 billion in new spending, significantly less than the roughly USD 2 trillion the White House had originally requested. According to the reports, the Republican leaders indicated that they were open to the proposal, but it remained unclear if the president and Democratic leaders in Congress would agree to the scaled-back plan. U.S. Treasuries rallied through most of the week as many investors looked to unwind positions that would benefit from price declines as the yield on the 10-year U.S. Treasury note fell to its lowest level in 3 months. The broad municipal bond market also generated gains through most of the week. In addition to the tailwind from falling Treasury yields, tax-exempt bond performance was aided by the 14th consecutive week of positive flows into municipal bond funds, according to Lipper data. According to traders, the primary calendar was active in the investment-grade corporate bond market, and the heavy supply was met with strong demand. Trading volumes in the secondary market were relatively light, and credit spreads remained largely steady. However, subdued issuance and an increase in demand from Asia led spreads tighter on Thursday. Anyways, that pretty much wraps up the 3 financial news events for this week, and I'm going to hand it off to Om to discuss the financial term of this week.
Now let's discuss our financial term of the week, cockroach theory. Let's start off by talking about cockroaches in our day-to-day lives. Cockroaches are creepy, annoying creatures that roam all about our households. But almost always, when you see a cockroach, you can be sure there are many more around that area. Similarly, the cockroach theory essentially states that when a company comes out with bad news, several other negative events related to it are likely to come out in the future. Bad events can come in the form of earnings misses, lawsuits, such as big tech recently, or anything negative that is unexpected. In depth, this phenomenon is more related to companies and their particular industries. The idea is that if a certain company within an industry comes out with bad news, that news can impact the whole sector, and similar issues may rise with companies within that given sector. This is generally associated with earnings surprises, as when a company in a given sector misses or makes earnings, the market expects similar results from the entire sector. The cockroach theory can have large impacts within the markets, as when investors have a stock that's performing poorly within one sector, they oftentimes reconsider many holdings within that sector, causing a mass sell-off. And when this mass sell-off occurs, stock prices plummet, and then other investors become worried and the cycle continues. In the early 2000s, energy company Enron, which was considered to be a good holding at the time, was found guilty of illegal accounting practices. They were misleading both investors and the entire public for nearly a decade. After the scandal, the accounting firm responsible for Enron's finances, Arthur Andersen, surrendered its CPA license, which is essentially what qualified them to be accountants. This surprise implied to investors that accounting scandals may be more widespread than they think, and to look out for such scandals. Over the next 1.5 years, similar scandals brought down several other companies, to name some, such as Adelphia and Tyco.